I'm Tim Kelly, Portfolio Manager for the Montgomery Fund, and welcome to this week's Video Insight. Well, reporting season is underway, and reporting season is a time when share prices can move around quite a bit in response to the new information released to the market, so it's a busy time for fund managers. While there's still a way to go to get to the end of this reporting season, I thought I'd take the opportunity today to review what we've seen so far in February. If we look at the overall market, the ASX 200 is up close to 3% in the first 2 weeks of February, so across the overall market, the news so far appears to be pretty good. If we look specifically at the Montgomery Fund portfolio, it has risen by a similar amount, and with 40% of the fund's portfolio positions having reported so far, the results are generally pretty pleasing. The larger fund holdings that have reported to date include REA, Car Sales, ResMed, Navitas and Challenger, and in each case the share price is up for the month of February. So those portfolio companies that have reported so far are generally doing well. Challenger is a good example, yesterday having reported record operating results with strong growth in annuity sales, supported by recent extensions to its distribution network. Challenger's strong results are also supported by some very appealing long-term fundamentals, including a strong market position and long-term volume growth, driven by a growing superannuation asset pool and increasing recognition that a larger part of that superannuation asset pool belongs in the sort of guaranteed income products that Challenger can provide. The Challenger share price has done well in the past year, and Challenger no longer looks particularly cheap to us. However, it does look like a high-quality company with a long runway of growth ahead of it, so long-term shareholders can expect to see earnings growth compounding in the years to come. We think it's important to keep that long-term outlook in mind, particularly in a market where many companies that have done well recently face a much more uncertain long-term outlook. Reporting season has a way to run yet, and we expect to see a mix of good news and bad news before it ends, so we'll have more to say at the end of the month. But regardless of the short-term ups and downs, we feel comfortable that the portfolio is invested in high-quality businesses that have the ability to do well in the long run, and so we're confident that our investors can also look forward to good results in the long run. That's all for this week. We'll be back with more next week, and in the meantime, you can follow us on Facebook and Twitter.